Yeah. What up, Mike? Mike?
Money.
What's going on, Sensei?
How y'all doing, man? So, this week, I remember last week we talked about just doing like a market playback and trading it on Zoom, and we could walk through it and go through questions and answers and why you did this and why you did that and what you saw and what you didn't see and how you saw that and what made you feel like that and blah blah blah. We could do all that in real time today. So I got a day. I got a day. So what we gonna do? So how we gonna do this is we gonna do the market replay first. Then after we do the market replay, then we're gonna go to the current state of the market and look at what we could do going into this coming week. Is everybody cool with that?
Yes, sir.
So, all right, let me get let me get my screen pulled up here. Oh, wait a second. Can you go? All right. Uh, so this is what I pulled up October 30th, October 29th, and October 30th, right here. So before I press play on the replay, this blue box that I got, this is the 5 minute chart. This blue box that I have highlighted here is the London kill zone. So this is all I did. I pulled this up this morning. I don't know. I don't know what's to come in the market on this day. So we're gonna trade this together. So I'm gonna just walk y'all through how I approach the market. Like so, for instance, I normally get to the market at about 5:45, 6 o'clock. So let me kind of fast forward to that part. Let's go to about 6. Yes, sir.
I saw chocolate that was open.
All right.
So far.
All right. You gonna eat it? You gonna eat it?
Yeah.
All right, go ahead. All right. So it's about 5:45. I'm about to press play. Let me see what speed I'm gonna put it on. We'll get a good speed. Let's go about 15. All right. All right. So y'all see the candles printing? Can y'all see that?
Yeah, shit.
Yeah, I see it.
All right. So normally this is what I do. Getting to the market, I'm going to the next highest time frame. For me, it's the 1 hour. I'm looking at the 1 hour to see what we got on the 1 hour, right? So let me draw it up for you. So all right. So I see, all right, I see this high up here. I'll put a line up here. And normally, hold up. My mouse got stuck. Hold up. Put a line up there. Say, okay, that's a high. I'm looking to see what else we got to trade. And boom, I see this gap down here. This could be a draw on liquidity right here. Okay. And then we got we got this swing low down here. So now by it being what, 5 o'clock in the morning? Oh, it's 6 o'clock in the morning now. On this day, I'm looking to see what, where could be the next draw on liquidity, right? So you got your high, you got your low, you got your gap. You got your gap that's probably in discount. So if I draw a range, if I draw a fib on this range, that gap is probably going to be in discount. And that's exactly where it is. So I'll leave this on here for the 1 hour. I'll leave this fib retracement on here for future reference. So go to the 4 hour, 2. Okay, I notice the 4 hour got a gap down here too. I don't really do too much drawings on the 4 hour. I just use the 4 hour as like a compass. Most of my drawings are always going to be on the 1 hour and a 5 minute. But let's go to the daily. Let's see what we got going on the daily. The daily looks kind of bullish at this point. But let's see what happens on this day. See what kind of price action we get going back down to the 5 minute. All right. So we got London high, we got London low down here. So we kind of still consolidating right now. So it's really no trade to take, right? So we just chill and wait. We see what kind of action we get going into 7 o'clock hour, 7 o'clock, 8 o'clock, market open at 8:30. We see what we get. Normally, I like to start taking my trades or looking to get into a trade like right before market open. If we don't have I don't know if this was a news day or not. So maybe I should have did my homework on that, but it don't look like it was a news day. All right, so let me draw this out right quick. We had this intermediate high right here. We just took. Let's see what kind of reaction we get off of that. We swept that. Look like we got a little energetic move here. Let's see what happens. And this is what I'm saying to myself as I'm looking at the market. This is like as I'm trading, when I'm sitting in front of the computer, these are the thoughts. These are the things that I'm saying out loud to myself. So I already got London high marked. I got London low marked. That's what the box is for. So I don't need to mark that up. But I just want to see what kind of action we get coming up, sweeping this little intermediate high right here. If we get anything. So at this point, it's nothing to trade right now. So I'm going from the 5 minute to the 1. Damn, what happened to my drawing? Oh, my bad. Here you go. To the 1 hour, just to see what's going on. So we kind of still consolidating on the 1 hour too. So nothing to trade yet. All right. So, okay. So we getting some strong action to the downside. All right. Now my Roachington is going up. All right. So now I'm gonna pause it. Let me pause it right now. Let me pause it. Let me pause it. Let me pause it. Let me pause it after this candle close. All right, cool. Pause it. Now, this is why this is a good teaching point. You see this? You see this leg? See this price leg? These 3 green candles? These
Yeah, we
three
see.
these three green candles swept liquidity, right? This intermediate high right here, right? So this price leg swept liquidity. This candle closed beneath that price leg. So now we got a change in the state of delivery on the 5 minute. I'll put a line right there. Now I'll be interested in seeing or even taking a trade from that point. If the market was to return here, I'll be interested in taking a trade from here. But we will have to sweep London first before I'll be like, before I take the trade. And I'll explain why. But let me just press play and let's just see what kind of action we get. See what we get. And keep in mind, we did have no, I don't want to keep. Let's just chill and see what kind of price action we get. Okay. What you gonna do? What you gonna do? You gonna sweep? Playing a little ping pong. Come on, go get that low. Go get it. Come on. Now this is how I really talk to myself while I'm trading. So don't think I'm crazy, but this is really like how I be at the chart. Oh, okay. See, all right, cool. We went got the low. All right. Now let's see what happens. Matter of fact, I ain't gonna hold y'all.
Order submitted.
I'm putting the order right there. It's a gap. Let me pause it. Let me tell y'all why I'm doing what I'm doing. I'm gonna pause it. Swept this intermediate high. Strong move to the downside, right? Price leg that swept liquidity. We closed beneath it. Got a gap, which I'm about to draw out right here. 5 minute gap. Sweep liquidity, reverse, create a gap. I'm looking to trade it. That's bread and butter, peanut butter and jelly, cocaine and pickle juice. All the same, right? So let's see what kind of price action we get. Let's see what we get. Now, also, well, no, never mind. We're gonna let's just take this trade and see if we
Order filled.
Now let me pause it. Let me pause it. Let me pause it. Now, let me pause it. So entering this trade right here, you'll be like, well, Mike, where you put your stop loss at? All right, cool, great. Let me put it on there.
Order submitted.
So I'm not putting it at the high. I'll put it at the gap candle. I'm not putting it way up here. I'm not trying to lose that much money on the trade. Top of the gap candle, that's where I'm putting my stop loss at, right? So if the market returns, so if the market inverts this gap and closes above it, then I was wrong. Cool. But you're not gonna sit here and tell me you're gonna sweep this intermediate high and reverse and give me an energetic move to the downside like that and think I'm not gonna trade it. It's just not gonna happen. But this is like the bread and butter trade. So even if you look at it from a different perspective, you'd be like, all right, well, Mike, we swept London low. Shouldn't you be looking for a reversal and a gap to be traded in that direction? Yeah, we could, but that's not what we got today, right? So I'm looking at this this energetic move to the downside, changing a 5-minute change in the state of delivery. You could call this a breaker, a 5-minute breaker. You could call it a 5-minute order block. You could call it a 5-minute mitigation block. You could call it whatever you want. This is a 5-minute change in the state of delivery. And it's a change in the state of delivery because of this. You got London kill zone right here. We come out of London kill zone playing ping pong, consolidating. We move to the upside. We sweep this intermediate high. Their price leg is swept. Now we reverse. We close beneath that price leg. So the delivery goes from bullish to bearish. So now we on the bearish order flow. This is the reason why I entered the trade here. So now that we in our trade, now we're looking for a price target to get out. So now I'm going to a higher time frame. Now remember, we have this gap that's in premium, right? I enter my trade way up here. Like I don't know what we're gonna trade right now here. And that's okay, but that's fine. So this is what I'm gonna do. I'm going to 5-minute chart. I'm gonna look for the next low, right? So I'm like, all right, well, if the price action is bearish, then I'll be looking to exit my trade here. Because notice we swept this low already. We swept this low, and we also swept London's low on this move, on this price leg, right? So I'll be like, all right, cool. Let me get out right here.
Order submitted.
All right, so from 729.00 to 681.50. That's a good trade, right? So let's just see how it plays out. Let's press play. Either I'm gonna win or I'm gonna lose. So at this point, you just, you're being patient, you sit and do your trade, you're chilling.
Sensei,
Some people move their stops loss.
I got a question.
Go ahead.
Would you consider that relative equal lows? I see the
Right
if
here?
you move no, if you go all the way over to the left between 1 and 3, 1,300 and 1,500.
Right here?
No,
Relative equal lows? Down here?
well, you move kind of quick on me, but let me see. I'm kind of still trying. If you move over, keep going to your right there, and right there. Those two. Would you
Down here?
Yeah, where you are.
Yeah. Yeah,
Okay,
that's for sure. That's relative equal lows too.
just want to make sure.
But this is how, so that's a good question. So this is how I point out my trades. When I see a swing low that is sitting out there like a sore thumb, like this, that's easy. That's low hanging fruit. And I don't know the market is going to go down here, but like for instance, like when you see a swing low that's just out here by itself chilling in the wrong neighborhood, that's low hanging fruit. So it's highly likely that the market could trade down here. But also, the observation that you made is also key too, right? So that's you're not wrong, is what I'm saying. You're not wrong. So let's just continue to see. Now I'll say this too, while the trade is going, like I'm comfortable. I like how this trade is setting up. I like it. I like it. I like it. I like this. I like it.
So what happens if you have your I'm not sure if you do it solely based on where like a liquidity run where it's going to, or you do it based on that and what your number is? Like how do you play that? Because if you get in it, just say I'm looking for 25 points, one
Mm-hmm.
contract,
Mm-hmm.
that'll yield me 500. But
Mm-hmm.
what if I see something, but it's like, do you get in? Do you suggest getting in based on solely on that, or it has to be a combination of the two?
So I say trade the way you want to trade. Like trade the way that makes you comfortable. So if you enter a trade and be like, man, look, I could get 500 points out this trade, take it. I mean, for not 500 points, $500 out this trade. But it all depends basically like on your comfort level. So like for me, sitting in this trade, it's like, okay, now are you reversing on me? What you doing? But if you feel like if your conviction is high to the downside, and let me pause it. Let me pause this. Let me pause this trade right now. So this is why I feel like my conviction will be high to the downside. So if we just look at it from a layman's point of view and just be like, okay, Mike, why did you get in this trade? Okay, I'm gonna explain to you why I got in this trade. You got an intermediate high, it was swept. You got an energetic move to the downside. So normally you looking for highs and lows of sessions, right? So for me personally, I would much rather this move happen off of the high of London being swept, but it didn't happen that way. So you got this energy, you got a intermediate high, swept, energetic move in the opposite direction. We close below the leg that swept liquidity. That's important. The price leg that sweeps liquidity normally is going to be a series of candles, one candle, two candles, three candles, even four candles. It's always going to be a series of candles or one candle, the same color that sweeps liquidity. Once you get a closure below that or above it, depending on what direction the market is trading in, that's your key. That's like, okay, so the market is telling me that it's reversing here, or the market is telling me that it wants lower prices, or the market is telling me it wants higher prices, whatever the case is. So this is what I'll be looking for in the market, right? So normally I'm looking to get into trades going into the 8 o'clock, 7 o'clock, 8 o'clock hour, because that's when most of the volume and stuff starts coming into the market. The volatility picks up coming out of the London kills or going into New York Open, right? So when you see that and you understand that and you understand like the manipulation and how things happen in the market, then you kind of it makes you more comfortable in your stance of what you taking and why you taking your trade. Another reason why I'll be comfortable in this trade and why I haven't moved my stop loss down is because this is a consolidation. We closed beneath the consolidation. We tested the consolidation with this candle. We have not come back into that realm of consolidation. And it's kind of like, in a sense, we swept this low and we didn't reverse. Meaning we swept this low, we didn't create a opportunity for bullish price action. So it's still weakness here, right? It's still weakness. So these are the things that you could be looking for while in your trade, or while you feel like you might be on pins and needles, or you nervous about your trade, or you might be like, oh man, look, I made $490. I'm getting out this trade. Nothing wrong with that either. A win is a win. But the more you get comfortable in taking your trades, you enter, you have an entry point and you have a price target. When I see a swing low that's just sitting outside by itself, that's like taking candy from a baby. I've seen this like almost every day when I come to the market.
Oh, Mike,
What's up?
can Brad, could you restate the question you was asking, Mike? I heard
Well,
something
so
about 25 points.
well,
Five.
no, I was just saying like just asking, do you solely get not solely, but like how do you advise getting in a trade just based on what your target is? Like
Mhm.
again, for me daily it's 25 points that's gonna yield me $500.
Mhm.
Or you need to see, or do you think it's more prudent to see more of these indicators like that you're pointing out to do that along with, having your price target in mind?
So
Mhm.
both to me. Um, Now, with you having a parameter of what you're trying to make, that means you only take trades that would get you $500, right? So if your target, like how Mike got it marked, if it doesn't reach $500, even though the setup is a smaller gap,
Order
a
canceled.
smaller swing low, then I'm not taking it if it's not going to get me
Order submitted.
$500 or more. You get what I'm saying? Because we're trading setups. So what'll happen is, let's say you say I only want $500 per day, right? If this trade goes through, that's probably a whole week of trading, but you got out of the way, although you got in there to go take out that swing low that Mike had. You get what I'm saying?
Yeah, I follow.
So
So
that's why I wouldn't necessarily. I would be looking for trades that's more than $500 because that's what I'm trying to make at a minimum. But if you're getting in a trade, the setup, you kind of want to start letting the setup play out because you'll end up having to trade every day to find $500, and is that's where the
the risk.
probabilities, the win ratio, you're not going to win every trade. You're making yourself vulnerable to the market because you're going there looking for a small amount when you would have just traded that one setup and let it play through because it's not greed, it's what you're practicing. You get what I'm saying?
Mhm.
Right.
Hit this target, hit here. Now, within it, I'm not saying if the trade was once you count your ticks, it's worth $5,000. I'm not saying let $4,500 go back red because it didn't hit that swing low. But you kind of want to, you can have your trailing stop and stuff like that, but you kind of want to try to sit through what you've been practicing. Follow through on your shot. Because I was doing the same thing you were saying, and I just had to I only want to make $300 a day. I had to keep on trading every day. And
Right.
you've been around, so we don't want to be
In the
in this
market every
market
day.
every day.
Right.
Not at all. So
Yeah.
that's how I look at it.
And then
Appreciate it.
the flip side of that is too, like letting the trade play out, but just moving your stop loss, right? So let's just say, you know, your conviction is high on this trade and you think the trade is going to hit your price target, but you want to lock in profit. Just lock in profit. But all right, I'm locked. As long as I lock in $500 on this trade, I'm good. You see what I'm saying? So like, let's hit the play button. And let's see because we don't even know what this trade is gonna do, to be honest. But we should we should get some energetic move to the downside here soon. We should. But in this case, yeah, here we go. In the curious case of
Order
business,
filled.
and you're done. You're done for the day. Now, that trade, I think that trade was like 800 and some dollars or something like that. But that was like a simplified form of trading. Like, and watching me do it's like it seems easy, but like when the market is moving, it's like you got all these questions in your mind about, but what if this happens? But what if this happens? But this might happen. This might happen. Or I saw this happen before. But when you in the market and you just looking at price action and you trading price action, that's that's all you can do. Now you enter your trade and then you put your stop loss, and then let's just say the market reverse on you and you get stopped out. That's the price of doing business. That's just the price of doing business, right? So now let's continue on this day of trading here. We're gonna go all the way to 10 o'clock and we're gonna tape read it. We're gonna talk about it. We're gonna see if we can find another trade. Let's do that. All right. So Mike done trading. So let's press now. While it's paused, let's go to the 1 hour. Now, look what we got on the 1 hour. Let me close this.
Order canceled.
So on the 1 hour, we have this consolidation right here. We also had this gap that's in premium that we traded into. Kind of now we're getting out of that. So the 1 hour is saying kind of bearish, right? If you notice on the left side of the price laid, there's nothing to really stop you. There's no we have gaps, but it's not a gap and something. It's not a gap and an order block. It's not a gap, and it's just gaps. So we have the equilibrium of the range right here. We still in premium. So can we trade down here? It's possible. So let's see how it plays out. So let's try to find another trade. Okay, so let's go back to the 5-minute time frame. All right. We had done an energetic move to the downside, got me out of my trade, right? Hit my price target. So let's see what happens now. Let's see if I can find another trade. What kind of price action do we get off of this liquidity sweep right here? Okay. Okay. All right. All right. So we still bearish. Now this candle, this green candle. Let's wait to see how this candle closes right now. That's printing.
And take
Okay,
out
so
his target, huh? The area that Branch was talking about, it took
just
out
about
that
to
one.
say that. I
Yeah.
just about to say that. Yep. Now, see, now your relative equal lows down here, Brian D. Taken out. See that? Maybe he's not with us no more. So relative equal lows taken out on that price leg. And so now this red candle printed, boom, close. This green candle and the sandwich in between these two red candles is now a what? A
Order.
5-minute order block, right? So now if we want to re-enter a trade, this is highly likely a reason to get into the trade. Now, I wouldn't get into this trade like for instance, if this candle opens up and trades higher and trades straight to this order block, I won't be interested in taking that trade. I would like for the market to create a gap here
Uh-huh.
and then trade up to hit the order block and to continue lower. But let's just see what happens. I like this price action. It's smooth. Mm. All right, so we have a gap. So would y'all, all right, let me pause it. Would anybody be interested in taking this trade?
I
Which
mean,
trade?
not me because I didn't make my money, so I'm just tape reading at this point.
No, no. So nobody
And I mean, taking which trade, Mike? To the
to
downside?
the downside. So notice
Uh,
we still got more liquidity to the downside. We got
Because
sweet.
I would see what that order block is. I would see how it would treat that level. So
Okay, so let's press play. Let's see how it plays out. I'm glad we getting some interaction today. Let's see how it plays out. So, but look, for for teaching purposes,
Order filled.
let's just sell it and see what happens. If we close, if we trade above this candle, this red candle right here, I'm closing this trade out.
And where are we in relation to what's on the hour? Would you feel doubt? Where's that? I'm looking for consequent encroachment. Okay, I see. Yeah, I got you.
All right. So let's go back to the 5. All right. So if this trade were to work out,
oh, you got the gap fill and retracement right there. Oh, that gap that it created.
Submitted.
now I ain't gonna hold you.
Order submitted.
I'm not gonna hold you. So in instances like this, all right, like you got your gap. Let's see. Let me move this out the way. So this gap, we're going into open right now, right? So this is open. What time is this? Is 8. All right, this is 8:30 candle. All right. So we ain't open, the New York Open, right? So you have your gap right here. As you can see right now, in real time, the market is respecting this gap right now, right? So if you go to the higher time frame, you're looking at if you're looking at the 1 hour, you're looking at the 1 hour saying, okay, where can we stop at? Right. So you say, okay, well, we got this gap right here that's at equilibrium, right? So in equilibrium, we don't look for trades in equilibrium. So I'm kind of wrong to be in this trade right now on a 1 hour time frame, right? But let's just see how it plays out. Just for teaching purposes, learning purposes, right? Let's just see what happens. Now, I ain't gonna hold y'all, bro. If I was trade, if I wasn't on, if this was a real trade, my stop loss is getting moved. I'm trailing this because I already made my money. I'm trailing this.
Order filled.
You're not about to get me. But the market is bearish. It's showing bearish tendencies right now. So let's see what happens. Let's see if it hits its price target. The swing lows,
Order filled.
there you go. Boom. Nice trade. Nice trade. So let me pause it because that don't look good. But let's go to the 1 hour. Look at that. So let's walk through this. Let's talk about it. Let's talk about it. This was a good trading day. So we had this gap, 1 hour gap that was in premium. All right. It wasn't highlighted before, but this neither here nor that. What I was focusing on was how we came out of the London kill zone, right? So the London kill zone, at this blue line, intermediate high, we swept that high. We had an energetic move in the opposite direction. The energetic move created a fair value gap. As you can see, it's where I entered my trade here, right? So from the 1 hour perspective, I was just saying how it was nothing on this side of the price leg that was gonna stop us. I just said that like 3 minutes ago, and it traded right into this gap that's in premium. Now I'm not gonna hold y'all. I'm expecting the gap. I'm expecting some sign of reversal here, right? So let's just see. Let's go down to the 5 minute and see what happens. Let me close this trade out though, because that makes it seem like we didn't have a good trading day, and we did,
Order filled.
and we did. But let's just see what happens. So we had this low that was swept, which was my second price target. And then we have these relative equal lows down here that we took out. Now also keep in mind, we're in a 1 hour gap, right? So let's just watch it from the 1 hour perspective and see. I'm expecting some type of reversal here. We in discount, we in deep discount. I'm expecting the market to try to get up out of there. Okay, so now this is what I'll do. Now, all right, let me pause it again. So if I hadn't taken the trade all day and I'm looking at this from a 1 hour perspective, now I'm going to the 5 minute to see what we got on the 5 minute. Okay, we don't have nothing to trade on the 5 minute. Okay, let's go to the 3 minute. Let that load up. Let's see what we got on the 3. Man, what is this? See, this is why these market playbacks, dog, you gotta, because what is this, dog? What is this? That didn't happen. I'm gonna go back to the 5 minute, man. I'm not about to play them games.
Hey, make sure when you exit too that you don't save it.
Oh, look at that.
Mess your chart up for when you go back. When you load back up, make sure you don't save all your changes and everything. It's gonna fuck mess your chart up.
Yeah. So I'm just watching from the 1 hour. Because the 5 minute, let me see. Yeah. Because if we could ignore this wick, if we could ignore this wick, we could be in business. Now, so if I'm looking for an upside trade, this is what I'm looking for. So if you exclude this wick, we have a gap right here. Hold up, buddy. Hold up. Hold up. So if you could ignore this wick right here, this was a gap, right? We inverted that gap, this candle. It opened up at the gap. So where would I be looking into this, take this trade to, right? If I wanted to take this trade. Now, hindsight being 2020, Mike, we didn't trade it already. But I'm just saying, just speaking to the point that I haven't taken a trade yet. And I'm looking to trade the reversal. This is what I'm looking for a signs of reversal.
Oh, Mike,
What you got?
is anybody in the red right now?
Is anybody in the red, right?
Boy, y'all ain't right, boy.
Oh. so man, so if I'm looking to take a reversal to the upside, I'm looking for, when I'm looking for, these are the three things that I look for, for a reversal. I'm looking for a gap, a, a gap in the opposite direction once the liquidity is swept, which we have right here. I'm looking for an inversion, which we have right here. And I'm looking for an order block, which we don't have. So the order block will be up here. Right? So let's just tape read. We don't have to take a trade. Let's just see how the market trades and what it does. Let's see if it creates a gap here. Does it trade back into the gap and go higher? Let's just see. Okay, that candle closed. Okay. Let's see what happens. This is the order block right here. So how we respect this order block is going to tell us a lot. If we trade straight through it, then the market is all right. Now, we traded straight through that order block. Let me pause it. This is a teachable moment. Because I know a lot of people see this candle right here and be like, this is an order block. Indeed, it is. It is an order block, right? But two things happen. We had, if you can ignore this wick, right? Just ignore that wick. It's not even there, right? So we traded into a 1 hour fair value gap that was in discount of the range. No, when we in discount, we buying, right? Cool. Market reverses in discount. We have a gap that's on the leg that sweeps liquidity. We invert that gap. So once you see that gap gets inverted, the market typically means business in that direction. And in this instance, it's to the upside, right? So you could trade this inversion, even though it didn't quite give you a clean entry, but you could have entered here, all right, and you could have been like, all right, I'm gonna just take it to this order block up here. So from 206.10 to 206.51, that's 41 points. It don't look like a lot, but it's a lot. And that's all you need to trade the NASDAQ. All you need to do is find these little pockets of movement to trade. That's all you need to do. That's it. 40 points, one contract, that's what? $800?
Thanks. Oh,
That's $800 right quick. And you wasn't even in that trade for 15 minutes. Right? So now back to the teachables.
20.
Order block, we traded through that order block, closed above it. So now in your mind, if you're looking at this price action, you should be like, okay, we should have some more room to go to the upside. Right? Let's see what happens. Let's see what happens. Okay. 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 as a candles print, I'll just be drawing on my chart just to see what's going on. See, trade back into this red candle, go higher. All right. So let me pause it here. So now let's just say you wanted to trade this reversal, right? So we got a gap here, we got a gap here, right? So this price laid, these three red candles in a row is now considered a what? Don't all say it at once.
Stop sign.
Hey, mute him.
How you mute people? Hold on.
So these three candles in a row is now considered an order block. We close above it on this candle. We trade to it with the very next candle, this red candle. The very next candle is another green candle to the upside. Now this is an order block. So you have an order block here, you got an order block here. Market trades back into this candle and respects it and gets about it. Now the market is paused right now, so I don't know what's going to happen. But if I was to enter this trade here, let's just say you didn't think the market was reversing until we closed above these three candles, right? Okay, if that's how you view the market, there's nothing wrong with that either. So now you need to find an entry for your trade, right? So let's say your entry for your trade was the top of this candle at 206.61, right? You're already up 20 points right now. But let's just see how the market plays out. This is beautiful price action. I gotta say it. This is beautiful price action. These are the days I like to trade. That's nice. So as you can see, everything that's bullish on this price leg is getting respected. Bullish order blocks are getting respected. The bearish order blocks, the bearish reasons to trade or to sell are getting disrespected. The left side of the price leg, you got your bearish order block here, bearish order block here, disrespected. So let's see what happens. What time is it? Okay. We got 20 more minutes for trading. Let's see what happens. We're going into 10 o'clock. I would like to see it kind of trade back into one of these gaps, though, to be honest. I would like that. Think we might get it. See what happens. Now I'm gonna listen. Let's go to the 1 hour and see. Now, this is what happens when you don't look at the higher time frames. See, this is what happens. I'm glad I caught that. Another gap right here. Trading into that gap. So that could have been a good trade too. I missed it, guys. My bad. I was on a 5 minute. I'm sorry. I was done trading for the day. I'm sorry. But even this, let's just see what kind of response we're getting off of that from a 5 minute perspective. Trade it back into that gap. Close beneath it. Let's see if you're going to close beneath it. You're not. All right. Well, I don't know. Let's see. Okay. Inverted that gap. Okay. Let's see how we respond to that. All right. Yeah. Okay. Yeah. So let me pause this. Let me pause this. Let me pause this. So looking at this price action, from, let's say, from from this green candle right here to this green candle or this red candle that's printing right now. What type of price action would y'all say this is? Would you say this is a bullish price action or bearish price action? No wrong.
Bearish.
Huh?
Bearish.
Bearish? Why bearish?
Bearish because it came from, I don't know. It's sold down. It bought it to a certain point, and now it has now created a leg down with would look like, I don't know, that last candle hadn't printed yet, but is it still bullish because the price action hasn't the state delivery hasn't really changed?
I don't know. I'm asking you. I just want to hear you say it, talk out loud and think it through.
Well, you see, I have a hard time doing that.
Oh, okay.
Yeah.
So from a 5 minute perspective, not let's just for right now, let's ignore the 1 hour time frame. All right. So this is what we got. So I'm gonna give you a broader picture. Now, I wish I could get rid of this wick because it's throwing me off. But so going back to London, coming out of London, right? Swept this intermediate high. Energetic move to the downside creates a gap into the said trade here. 5 minute change in the state of delivery takes you down to the 1 hour gap that's in discount. The 1 hour gap is in discount, gets bought up. Price lead that swept liquidity it gets closed above, right? And then we immediately trade right back into it. So we had this gap right here, filled, retraced. Then we have this gap down here that's beneath us. So until we trade below these lows and continue lower, this price action is still bullish. Now, looking at it from a 1 hour perspective,
Gonna get the glue up.
you see how we traded into the gap and exploded to the upside. This candle, this is probably gonna be Winston trade right here. Volume imbalance, this wick. But we traded into this gap and had a strong reaction, which was the reversal that we're speaking about right here. Strong reaction. So now this 10 o'clock candle just opened up. We 5 seconds into this 10 o'clock candle, which on a 1 hour, this candle looks like this. So you're gonna have open, low. You're probably gonna have open, low, high, close, right? So we're probably gonna open up, trade lower, and then go to the upside. Now, if I'm wrong, I'm wrong. This is market replay. But in my estimation, the market is still bullish because even from a higher time frame perspective, this price leg, this 1 hour price leg, we haven't closed beneath none of it. We just traded back into the discount of the range. So that's why the price action or the order flow, in my opinion, is still bullish. So let's just see how it plays out for the next candle or so. Let's see. This is a teachable moment too, man. This is teachable. Let me pause. This is my last pause, and we're gonna let it play out. So this is a bullish gap right here, and then we close beneath it. So naturally, you're thinking about this being an inversion for a continuation to the downside, which is this is not a wrong way to think. But once we close back above that gap, this is now a reclaimed bullish gap. Write it down, take a picture. So like when you see, so like like ICT he says stuff like the paintbrush, like you paint over it, then you paint back over it with another color, right? So it's bullish, bearish, then bullish again. So It's reclaimed now. And then we trade to probably half of the gap here. And we're probably going to continue to the upside with this high probably being a price target, or maybe even this high. But let's just play it out. Let's just see what happens. Because we could, you never know. You never know. We could sell off again. Look at that. Bing bong. There you go. So we're gonna looks like we wanted the discount. Discount of the 5-minute range. Let's see. This was a gap too. I didn't throw it out. This wick threw me off, man. I'm sorry. It's throwing me off. Let's see what let's see what happens. Let's see what happens if we trade into this gap down here. Oh, we touched it. Let's see what happens. There we go. Whoop, there it is. Let's see. Gap right here, y'all. See that? Trade it back into that gap. Y'all see that? Let's see how it responds. Making my way downtown, walking fast. I like this price action. I like it. This blue line, this blue line right here is a price target. Let's see if it gets hit before 11 o'clock. Don't play these consolidation games, man. Get up there. Go ahead. All right. So that's it. That's it. So let's just recap the price action, right? So we entered the market. So we entered the market at about 6 o'clock or whatever. Looked at the price action. We had the London kills on drawn out high to low. This intermediate high was swept right here. Put the line back up there. Come on, man. All right. Let me make the candles a little bigger so we can talk about it. This intermediate high was swept. Gave you a reversal. And when I say reversal, I mean an energetic move in the opposite direction. So this is what you're looking for. These are the signatures and price that you're looking for, right? So give you an energetic move in the opposite direction. So the price laid that swept liquidity, these three candles got closed beneath. Now you have a 5-minute change in the state of delivery. You also have a gap. So you have a 5-minute change in state of delivery that's inside of a 5-minute gap. We trade into the gap. My entry was at the bottom of this green candle. We took entry here. First price target was this swing low that was sticking out like a sore thumb. That target got hit. Brian didn't mention these lows down here. That target got hit. Now keep in mind, let's go back and forth. We had this 1 hour gap that was in discount, right? Now, when I drew the range, it was before these three, well, 1, 2, 3, 4, 5, before these candles printed, right? So all we knew was that we were in premium. That's all we knew. And we had this gap in discount. And I had said previously before we really sold off, I said on the left side of this, on the left side of this price leg, there was really nothing that was going to stop us from getting to discount because it's just nothing. It's nothing really. It's gaps, but it's not a gap and something else. It's just a gap. All gaps are not created equal unless they're in premium or in discount. This gap was in discount, right? So basically what we did was we sold the premium of the 1 hour range, which gave us a gap. We sold the premium all the way down to the discount of the 1 hour range. So if we squeeze this chart, we have all these lows that's sticking out. This low, relative equal lows, these two, that's a lot of liquidity, bro. Right? But Mike, personally, I'm just looking for low-hanging fruit. So if I could grab $800 to $1,000 right quick in like 15 minutes, that's what I'm gonna do. I'm not, but if I know if like on this day in particular, when I saw on the left side of the range, on the 1 hour range, there was nothing that was gonna stop us from getting into discount, then it's highly likely that I would have looked for another trade to finish the move to discount. Probably on the minis though, with less risk. But that's neither here nor there. But we just recapping what we did today, right? So we took our trade to the downside. We had a price target here. Brian had mentioned these relative equal lows down here. We had these lows down here. And every time when I see swing lows or lows that's just sticking out, like sore thumbs, like these, and this one, those are easy targets. That's low-hanging fruit. You always want to look for stuff like that when the market is moving in that direction as your price target. All right. So once we took out these lows, we reversed. So now this is also my bread and butter trade. We sweep a low, we sweep lows, we reverse, we trade into a discount of the range, and we reverse. And when we reverse, we create a fair value gap. We traded into that fair value gap here. We tapped it right here. So you take this, you enter this trade, where you taking it? You're taking it to these highs. But we just didn't get there yet. And it's highly likely that we probably will get there. But, I'm not trading at 11 o'clock in the morning. Right. So if I would have entered this trade here looking to take these highs out and we start pity patting around right here, I'm just gonna close that trade out. I'm not gonna hold you. Because between the lunch session, I don't like trading it. Like I don't like trading between 11 and 12:30. I don't like trading unless the market is this extremely aggressive in one direction and is moving aggressively in one direction, then I'll look at it a little differently. But when we just trading days like this, when we just seeking liquidity and reversing, which is mostly every day, then I'm not sitting through that. When I'm like, man, you about to play around because you could have just went got this right quick. So I'm not about to even do it. So instead of hitting my price target, I'm gonna just close this trade out and profit and go by my B. But this is also the bread and butter trade. Now I need y'all to ignore this wick because it's bothering me. I'm not gonna lie. But you're looking for a reversal. You get your gap when the market reverses, market trades into that gap. Also, you had the inversion fair value gap right here. So that's like those are your signatures that you look for in a reversal. You had a gap on the price leg that swept liquidity right here, A, B, C. We invert that gap while also creating a gap. That's what you're looking for. You're looking to take that to the upside. These are your signatures of reversal. Just like up here, your signature for reversal. Sweeping the low or high, an energetic move in the opposite direction. You trade back into that move. You trade back into that gap. You take it to your next drawn liquidity, your next section, your next session low, 1 hour low, whatever whatever your price target is. And like what I just explained to y'all a little while ago, I'm looking for the lows. I'm looking for the lows, but I'm sorry, my bad, y'all. You're looking for the lows, price targets, right? A gang of lows right here. You roll up on them, turn the lights on, all y'all going to jail. Wrong place at the wrong time. You're looking for that. This is what you're looking for, right? Look at him, just sitting outside by himself. Mama told him not to come outside, but he won't be outside. So I had to get you. Your mama said, go inside and clean the kitchen. What you doing? You outside. Okay. Since you won't be outside, okay, I got something for you. Boom.
A
See
hot boy on this hot car.
that? So so when your conviction is in one direction and the signatures and price are showing you that the market wants to move in that direction, these are your price targets. You're always looking for the swing lows, right? So going back to the 1 hour time frame, we traded back into the discount of that range. We got up out of that. So this is why actually I was saying that the price action was overall still bullish because we didn't close beneath anything significant. We didn't close beneath anything significant on a 1 hour time frame and on a 5 minute. So trade into discount, get out of discount. Boom. Price action still bullish. Y'all see it? Y'all understand why I'm saying that?
Sir.
Y'all have any questions about because after I finish the market playback, we're gonna just go into the chart and just break it down right quick because I know people attention spans are short, including mine. So if y'all have any questions, please feel free to ask questions on why we took those trades, why the price target was the price target, why did you feel comfortable taking that trade, why when you looked at the data looked bullish, why you took a bearish trade. I mean, if any questions, I feel free to ask.
I missed most of it, but why are you saying this bullish?
Why I'm saying the price action still bullish?
Yeah.
All right, because if you look at the range, we got premium. You know what premium and discount is, right? 23 to 38 discount, 61 to 76, that's premium and above, right? So from a 1 hour perspective, we traded in the premium all the way to discount. Now, we didn't close beneath anything of significance, meaning close beneath this price leg, this bullish price leg of, I don't know, 1, 2, 3, 4, 5, 6. I don't know how many other candles in a row that is of bullish price action. We didn't close beneath it. All we did was trade back into the discount of the range. And as you can see from this wick, we traded into it and got up out of there. Very next candle, closed green. This candle opened up lower, traded higher. Look at this candle. So I could probably, if I was a bet man, I would say this candle probably going to trade higher too. But we didn't close beneath anything of significance on a 1 hour time frame. And then if you look at it from a 5 minute perspective, right? So this is premium. This was the first trade that we took in premium. We took it down to discount. Discount reversed, created a fair value gap here, inverted this gap, traded higher, traded back into the discount of the range, which was this fair value gap, respected it, traded up out of there. Price action is still bullish. Now, if we would have traded down and closed beneath this price leg, then I'm like, okay, price action is bearish. So basically, all we did was trade from premium of the range to discount of the range. We sold the premium, now we buying the discount. That's it. So all you need to do is just find reasons to enter your trade. So this trade right here is Mike's bread and butter setup. You call it a peanut butter and jelly. This trade up here, that was the first trade that we entered going into the day, is also Mike's peanut butter and jelly trade. Because all you're looking for is a sweep of liquidity and an energetic move in the opposite direction. So we have a sweep, energetic move to the downside. The energetic move creates a gap. We trade into that gap and we get up out of that. We go into the discount. The discount say, all right, I got y'all. We're reversing the discount. We create a gap. We invert this gap, trade higher. Boom, trade right back into touch the gap and get up out of that. So your price target will probably be this high right here. Now, I stopped the market at 11 o'clock because normally I'm out the market at about 10 o'clock. But this is learning purposes. We trying to like teach in real time instead of watching candles that's not moving or price action that happened last week. This is real time trading. Like we trading in real time today. And this is what we're gonna continue to do on Sundays. So next Sunday, like Winston gonna do it next Sunday. Winston gonna find his setup. He gonna trade his setup. He gonna explain to you why he took it. Whatever day he chooses to trade, I'm gonna let Winston do it because my way of trading might not be sufficient for everybody here. Winston might point stuff out to y'all to make y'all have aha moments in his trading. You know what I'm saying? So for me, I try to keep it as simple as possible. I'm just looking for like I told y'all last week, I trade reversals and continuations. That's it. This is a reversal up here. This is a reversal down here. That's it. That's all I'm looking to trade. Reversals and continuations. Now, this is your reversal. This is your reversal. Do we have a continuation? No, we do not have a continuation. Because a continuation will be something in the middle of the range that gives you reason to take the trade, whether it be got a bunch of key sweats in. We swept that, boom, right? Sweats ago, swept that. Strong move in the opposite direction, but something stopped us. I'm gonna let y'all tell me what this is. What's this candle right here, y'all?
OB.
Order block, right? So this is the weekly chart. Let's go down to the daily and see what we got on the daily. All right. Got this high. See, so these candles up here, especially these two candles, I hate when the market manipulate like that, dog, because it makes you believe that the market is about to do something that it's not about to do. Because you thinking, if you're looking at this, it's like, okay, we're gonna probably just consolidate and then put the next leg higher, and then it just drop. So, but anyway, we had this volume imbalance right here. Let me draw it out for y'all. With this volume imbalance. We got one up here. I could have drew that better, but y'all get the picture, right? We had this this daily gap right here. Boy, the group chat was going crazy Friday, boy. I was at Sam's though, so I don't remember what happened on Friday. But we had this volume imbalance right here. Also. So let me if I could if I could get, let me let me teach y'all something right quick. Let me show y'all something. Not teach y'all. Let me show y'all something right quick. So y'all remember how I'm about to remove all this off the chart. Y'all remember how I used to tell y'all like like London, like if I'm trading London, I'm looking for manipulation coming out of London, and then I'm trading the opposite of what's happening coming out of London. So think of this as London, right? So this consolidation coming out of London, right? And then we manipulate to the upside. This price leg is manipulation. You got consolidation. We consolidated for a long time in premium, or the premium of this range. We manipulated to the upside. We swept the high. Now we getting some distribution to the downside. Do I think the move to the downside is done? Nope, I don't. Because there's a reason why we consolidated for a long time right here. We consolidated and for this to be the end of the move right here to the upside? No, no. I think we're gonna get a larger move to the downside. This is my price target. This gap that's in premium discount double check right here. Right now, if we trade through this, and then you're looking for lower prices, and that's fine. But overall, this is the price target. This gap. This is my area of interest. So just think of this as manipulation. I'm sorry, consolidation, manipulation to the upside, and distribution to the downside. I think we're going to continue to the downside. Now, I think we're going to rebound first. We can get a little rebound here, and then we're going to continue to the downside going into the week, right? But anywho, gotcha. So we have this gap here. That we pretty much filled, a couple of ticks away from filling it, but it's pretty much filled, right? But look where we closed at. So if you draw the fib on it, right? If you draw the fib on it, if the market wants to continue in the opposite direction, the market wants to reverse, it's not going to trade inside this gap and close this deep into the gap. The lowest it's going to go is probably 38%, but it's not going to close below it. It's going to wick. You're going to have a nice wick. And it's going to show you signs of continuation to the upside. Now, same rules apply as the market replay we just talked about. Like, we still haven't closed beneath this price leg. A McGriddle. Huh? You about to make eggs and Hawaiian rolls? All right. That sounds good. All right. So we still haven't closed beneath this price leg, right? So that's why I'm assuming we rebound a little bit going into the week and then continue the price leg to the downside. So once we close beneath this price leg, then you can be looking for price action to enter the dragon right here. This is the last line of defense. Now we trade through this. If we trade through this, close beneath this aggressively, then I don't know what to tell you. I don't know what to tell you. I do know what to tell you, but I don't know what to tell you. So just be mindful. Now, let me move this off the chart. Let's go down to the 4-hour. So the 4-hour is showing you signs of reversal right now, right? But also we got this gap right here. So let's always keep it sensible and put the range on it so we know what's going on. So we in discount of the 4-hour range. They had this small gap in discount, right? Traded into it, reverse, and got up out of there. Closed right here. Cool. All right. So going into the week, we're expecting some type of retracement, right? Cool. To the upside. All right. Let's go to the 1-hour. 1-hour saying the same thing. I don't even know why I put this line here. I can't remember. I'm gonna start. Mike, start writing on your chart and put it in my notes. But anyway, let's do the same thing on a 1 hour. Boom, being discounted at 1 hour, right? So we buy it, we buying a discount, we selling the premium, right? So we got these gaps to trade through. It's probably gonna be fairly easy to trade through, but like I said, going into the week, I'm expecting a retracement to the upside before the next leg to the downside. And if I'm wrong, I'm wrong. If the market continues to be bullish and trades higher than this high and continues to create higher highs, then so be it. I'm cool with that too. We could trade it going both ways. We skilled traders in this group. You know what I'm saying? So it's not like we only prepared to trade one way. We could trade both ways. We could trade consolidation too if we want to. But anywho, signs of reversal right here. From a 1 hour perspective. So going into the week, I'm expecting a retracement back into at least 50% of the range, which is up here, which is also a 1 hour change in the state of delivery. If y'all see that, boom. So we'll see what happens going into the week. From a 5-minute perspective, I don't have nothing marked up on this 5-minute chart. Did we? Yeah, well, hey, we swept low, created a gap, traded into that gap, deep into that gap. I don't like that. I don't like when the market do that. Traded deep into the gap, got up out of there. So I'm expecting a retracement. Yeah, I'm expecting a retracement to the upside, at least to 50% of the 1 hour or 4 hour range, which is here. Was it 686, 690 in this area? Then I want to see what happens. Do we continue higher, or do we just pause here, consolidate, next leg lower, or do we say, okay, we didn't sold off enough, we going higher? Whatever you want to do, I'm with you. I know what I'm looking for, right? So we know what we're looking for. We ain't worrying about what the market doing. We just need to govern ourselves accordingly. That's it. So with that being said, does anybody have any questions, comments, or concerns about anything that we went over today? Like I said, on Sundays, that's what we're gonna start doing. We're gonna just start live trading, market replay, so we can get all the questions out, all the, what would you do if this happened? Or what about this? Or what about your friends? All that. We can do all that. You know what I'm saying? So instead of it being hypothetical, we could actually trade it in real time. So, and if y'all have a date in mind that y'all have in y'all mind that y'all want to trade, we could plug that in and trade it. So if it's a day that you had a bad trading day, or you had a great trading day, or you had a trading day where you was confused, you didn't know what was going on, bring it to the Zoom and we could trade it together, or we could look at it together and we could all talk through it. That way we could become better traders. You know what I'm saying? Instead of just listening to me talk all day. You know what I'm saying? I'm not that interesting. Man. Let me just see one thing right quick before we go to the hood. I tell you what, if this monthly candle turn over and close red, oh my goodness. I don't think it's gonna happen though. I don't know. I'm not Nostradamus. I can't predict the future. But yeah, that's all I got, man. So we about to go to the hood. We about to go to the hood where they do the most good.
Appreciate it, Sensei. Tasha.
For sure. Winston, you ready?
Yes, sir.
Thank you too, Mr. Hayes. I appreciate that.
No problem.
Is SPY going to 605?
There you go. was from outer space.
Home was going to 605. Why you got a 605?
Because you said 610, and I just got within that range.
What I said was, let's start a
If it,
challenge.
oh,
And
you
we
say
Oh,
just,
100 to 200, 200 to,
something like that. It's
okay.
100 to 500, 500 to 1,000, and we'll be able to do that in 20 minutes. All right. But seriously though, I think you got the wrong idea about what I was saying. How we do this, Mike? I can see my chart. You can see my chart? Yeah, yeah, yeah.
Yeah.
Yeah, 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 yeah,
Yep,
yeah.
yep,
All
yep.
right. All right. I don't like NVIDIA. Look like NVIDIA gonna come down to 131. We were saying 155. It did not take out its high from last week at 149.77. I mean, from the week before. It didn't take out it last week. We also closed back under the fib extension after we broke it. So I'm looking for them to go down to possibly 131, and that be its last leg of defense. QQQ. QQQ took out its high, created a new high, and it used the fib as support. I would, if y'all in the QQ, I don't think we called it QQQ trade, but if we start trading below the low of last week, which was, if y'all look in the top left corner, 494.49. So we get to 494 flat, 493, then possibly look for some more downside. SPY,
yeah, yeah.
SPY took out its high last week, came back down, made sure we didn't make a gap, and closed above the 585 mark, which was our entry. So I am still bullish on this. If we get to 600 now, get out to 605.
When you get to 600, get out.
Get out the way. That's our
Okay,
target, 600. Okay.
okay.
So even if you got this 610, we're looking for it to happen quick. Wait, you got 2 weeks on it, right?
2 weeks, yeah, it expired, yeah, at the end of
Let
this
me
month.
say this. See what matters to you once it gets up to 600. See
Oh,
if we go that way. See, you know, if the number is good to you, then you get out. You know what I mean? But if we start trading, same thing. If we start trading under uh 583, and I'm talking about like a daily closure night, it went to 583 and then shot up to 585, 587, whatever. But if you start seeing it playing around 583, definitely 580, then we probably looking, this will end up being like a reversal candle when we come back to it. So this would be a sign of reversal. But hopefully, like Mike said, we could get, we had a nice little sell off. So hopefully we could get, uh, uh, by holding some of the levels, not hopefully, by holding some of the levels, I'm still going to see nothing was violated. Let's get that upside movement. It's options. So I'm happy you got 2 weeks on it. But 600, 605 is still the way to go until we close under 583. If we close under 583. and the long target is still 610 right here because we held in the fibs, both of them. I drew two, it held both of them. So 610 is still a number, and we'll just be looking at it every day. I'll let you know when I got out too, because I'm in the 600 for 2 weeks.
Okay.
So I'll let you know when I get out. And I think that was the three that we talked about. Nvidia going, I had it going to 155. It did not take out the high, and it broke on the fibs level. So I'm thinking now it goes to 131. If you wanted to get involved with that, I'm just gonna stick to the spy play that we're in, and kind of push everything else to the side. So you good with that? Maul, you got
Good.
in? Is Maul in there? No.
Yeah, I'm here. I ain't getting nothing over the weekend.
All right. You ain't
Oh,
you ain't getting the
weekend.
spy play?
Nah.
Okay. All right. Well, yeah. Well, now me and you are still in the group chat, but we'll still talk through it. If I end up getting out, I'm gonna let you know. I'm looking to just get out of the way. It might be at a loss or whatever, but we should know early on uh if it's gonna be something or not. So that way, if it is it's a minimal loss, not the whole thing.
Yeah.
Y'all got anything else y'all want to get?
Uh,
Mike, you got any thing you want to say about this? I'm sorry.
no. You on point. You on point. Spy, which you just spy in the triple Qs, right?
Yeah.
Yeah.
So
So
spy, it didn't break. This is what I'm looking at. It didn't. It took out the high.
mhm.
Didn't break here. But if we start to trade lower, I'm saying me and him gonna get out. But if we could open this week green,
It's probably gonna open up green.
yeah,
To be honest with you, I'm expecting a retracement, even a continuation to the upside. Really,
yeah.
it could continue to the upside, bro. Um, get you a nice little Santa rally,
Mhm.
but
Yeah, it broke out of this. That was
yeah,
a nice bullish green candle.
came back
And
and
again,
tested it.
came back, made sure we didn't have a gap. So you really ain't got. I mean, where's the next gap at?
You have nothing.
Yeah. So let's see. Let's see if we can hit the 100% on here, bro. Let's see if we can get that 610. Again, not saying it's gonna be next week or this week coming up, but possibly 2 weeks. But again, 600, I think the entry will give us some money if we see 600 this week. We see that retracement that Mike's speaking of. Yeah.
Go look at one more stock for me, bro, before we get off. Pa Palantir, bro. Nah,
Oh, my bad. My bad.
don't do that, bro. Nah, you being a nigga now, bro.
Hey, look, my bad. You know, it's muscle memory, bro.
Oh, okay. Okay. I just wanted to see where it was at.
God fucking damn, dog. That was a good call, Benny Boone.
That was a good one.
This remind me of that fucking. We see you been in there.
Yeah, I'm in here.
You said the nigga that's over there, Dana White or Joe Rogan.
Joe Rogan.
That's who brought this up.
Jerry Roman, man.
My
No
bad.
fucking Joe Rogan, man. This ain't no UFC. The
My
fuck?
bad. We need more. We need you to do more. Jerry. What you said? Now I'm joking. I done fucked the man up with Jim Kramer. Kramer.
Jerry Roman.
Jerry Roman. We need
Hmm.
him. Call him to the front of the congregation. We need some more shit from
Yeah,
him.
when he put these kind out there, I bring them to the group, dog.
Yeah, keep doing that because this was.
But feel free to go check them out yourself. He got some good content.
Um,
Man, I wish Ben would have took that, bro. Like that'll make me feel good.
fuck him. I wish I would have took it.
He said the contract wasn't moving. Damn, we told nigga get in there what 20? 22,
You would
17.
have
Let
needed
me
this
tell
to
you.
happen when it happened.
Let me tell you, them bitches wasn't moving because the stock was just creeping. This right here, this changed all them contracts, dog. All them bitches popped off.
Mm.
Yeah, cause when we
All of
was
them.
down here though. You see, I was
Nigga,
consolidating,
I
Mike.
had,
Yep.
listen what I'm telling you, bro. I was looking at $45 calls for December, but it wasn't really moving. I think I paid like 23 cents or some shit like that. Man,
Mm.
some of them contracts is up to like, I think when I looked at it when it was at 50 something dollars, them bitches up to like 14, 15, $1,700, dog. For
Mm.
23 cents.
Preacher.
And it's probably way higher than that now because it did moved another $10 in a week.
You said you was looking at 45 for December?
I was looking at 45 because you got to think at the time the contract was at, I think when we revisited again, it got up to like 28, 29, and you were saying if it come back down to
It did.
27, 26, you heard me like I'll probably get in like some 45 wouldn't be bad or some 40s. Niggas saying 35s. We were calling all kind of numbers, but everything was under 45. This right here went way above and beyond, dog.
Yeah,
All the shit we called.
I'm looking at the $45 call right now for December 20th. Is at $21.
No, I'm telling you,
Damn.
crazy work.
And I think this was the last joint when it popped and it came, then hit exactly right here. I don't know when we were saying back to 28, but
Right,
nevertheless,
right up in there, what that little small gap.
right here.
Mm-hmm. That's what we were saying. Yep. And
Just
then
bring the next one, bro. Try to be more. I think everybody should dive into it because that dude, I think he told him about the BX joint. We was all on options and shit, and that shit did what it had to do. Obviously, it's sold off now, but I'm just remembering some of the stocks that yeah bought up. Yeah, the horse ain't dead, but that bitch running free now, so let him be free. Let him go. But that's all. That's all y'all had. I'm not stopped the show. That was it.
yeah, bro. That's it. So what's the trade for spy and
We looking for 610 to come out, but me and Nail got into the entry was 585. That's what happened Friday. It sold off. It went down to 583,
Mhm.
and then it came closed back above 585. So
That's
now we
okay.
looking for 610 to come out.
Okay. All
So
right.
if it opens, hopefully it don't. Hopefully y'all don't get an entry. That's what me and Nail hoping. So hopefully that bitch at 590 when it opens tomorrow. But if it's still down there, then like a 2 week out, 610 call,
Okay.
605, 610, whatever you see fit. And if it start trading under 583, 585, then we just gonna take our loss because we already in it. Get out the way and see what it's gonna do. But that's that.
Okay. Sound like a plan.
All right. Well,
Sound like a
in
plan.
the chat, y'all.
All right, bro. Y'all be good.
All
Let
right.
me go ahead and get that Zoom play, boy.
I got you.